LocationScore Lads here, just talking about vacancy rates. Bryce, what's vacancy rate?
Yeah, well, it's the number of properties that are available for rent and the number of properties that haven't got a tenant in it. It's a very simple measure, but for me, it's a critical measure.
Yep.
Because I'm always looking for, capital growth, rental return, quality of tenant, and the vacancy rate, because you can get a couple of things to stack up really well, but if you don't get if the occupancy in the area is shot,
yep,
it all comes crashing down. So
where's that tenant?
Key measure.
Tenant come here. There's 10 properties to choose from. Pick mine.
Exactly. So it's a really core indicator for investors, and it's one that probably most amateur researchers would use as a fundamental starting point.
Absolutely, yeah. And the interesting thing about vacancy rates that I've noticed, even just in the last couple of years, is it's not just about cash flow. Everyone's thinking about how long am I going to have to survive without getting any rental income. But it's actually a lead indicator to future capital growth, because whatever it is that is dropping vacancy rates to close to zero, it's appeal about the location to tenants. And tenants are human beings, just like property investors, just like owner-occupiers. Whatever it is that's appealing about that suburb that's causing the vacancy rate to drop, it will attract eventually owner-occupiers. But the tenants are more agile because it's easier to get a lease than a mortgage. So the appeal will flow over to owner-occupiers and they'll place pressure on prices. The low vacancy rate will put pressure on yields to go up. That will attract investors. So the vacancy rate is quite a good early indicator of excellent capital growth potential.
Now it is hard though, because ultimately what we're trying to do is how do we measure vacancy rate? So we know the formula, but what do? There's been some people who used to count the lights that were on, or the lights that didn't turn on, or looking at the electricity bills in buildings to see how many people are actually living in that high-rise residential apartment. Now, that's not a great way to measure it. How do we measure it, Jeremy?
Well, the easiest way is to jump onto one of these portals, these real estate listing portals, and look at what is available for rent.
Yep.
However, some of the calculations can be based on a simple count, but you have to look closely at the description, because some of them might be available at a future date, meaning they're currently occupied. They're not vacant. There can also be problems with the property manager not removing the advertisement after it has been filled. So there are some unreliable circumstances, but usually they tend to balance one another out, and if you've got a significant market size, you can get a reasonably reliable score. The thing that's great about vacancy rates is it's real time. You're not waiting for some data to be published. You can jump online right now and see how many properties are listed for rent. So that's one attractive thing about it.
And what I love about the way in which we've aggregated it is because, going back 10, 15 years when I was doing it all manually, I would literally pick my 50 suburbs that I want to analyse, and then it's like click on, okay, number of houses, 204 versus the volume of properties that I know about. Is that, and then trying to get a trend. We've got all of that data. We've done all the hard work. We've put it all together. There's literally tens of thousands of hours saved in aggregating that data.
Yeah, and if the most expensive, I always say the biggest expense anyone has if they're investing in property is a vacancy. It's not rates, it's not body corporates, it's a vacancy. So it's a really critical measure. So have you got when you're doing the back testing, have you seen some trends on where you think equilibrium sits and what's
it's around about 2.5%, maybe to 3%. It seems to be I've read and heard a lot of people say 3% is a market imbalance. But I think that's a bit like you've got to drink 8 glasses of water.
Wait a sec. Roughly 3%. Yeah.
Roughly 3%. Calculations can vary dramatically, but I would put it at around about 2.5%, but I wouldn't be interested in a market unless it had a vacancy rate around 1%, and of course the lower the better.
Yeah.
There you go, folks. It's a very critical measure that you need to be looking at if you're looking to buy your next investment property. Vacancy rate.